All right, exciting times, exciting times. We got a lot of, we actually do have a few people watching already from the very beginning. So it's going to be interesting to see here. We're going to be trading gold. We do have some high impact news events coming up for, not for gold, but for the USD, which is obviously, going to affect gold as well. Victor, we talked a little bit about EU when, behind the scenes here before going live. That was the insane move we had yesterday, and I talked about how I was, biased to the long side, but I didn't want to go long. Maybe I should have had, should have gone long here.
Hi, everyone.
It's a good one.
I'm excited as always. A little bit sad because today is the last day of our stream for this week. So, but I mean, let's enjoy the day we have, which is in front of us. In concerning the EU, yes, it went over and beyond what I expected, because I remember we talked about it was already when we were at the end of our stream. It was about the 100% ATR, and I said, well, if today is a regular day, then it shouldn't go much higher. And I said, well, we did have a red folder news which was bullish, but is that really typically what pushes price like 150% ATR? Not really, unless it's very surprising. And it wasn't very well. It was different than what expected, but that's happens a lot. I would expect this kind of movement after FUMC, right? After interest rate changes or NFP, and not this one, although it was high impact. But I didn't see that volatility coming into the market right away with gapping 20 pips. When that happens, we know we are in business for a big move. Yesterday, it didn't start that way from the from the news release. So I didn't expect it, and so that's why you need to be ready for everything. And it's okay. I wasn't in the trade, so it's but even if I were, getting out at a place that that usually is a good place is always a good exit, even though you will not catch days like yesterday where it keeps on going and going and going, because simply you don't know really. Like, it's we don't have a crystal ball. We don't know what's going to happen. You just follow price action, and you frame that within the range, the typical range that you expect on that day. So yes, it was very surprising, but I mean, for everyone who was long, must be great having your pair, moving so consistently and without a stop. I mean, it was a juggernaut yesterday.
Yeah. So we got two things. Well, actually, we got three things we're going to do today. We've all week we promised people about you talking about outside bars. So we have to do that today, and I'm looking forward to that, because I do think that the outside bar is like a bullish engulfing on or engulfing on steroids, like you like to say, and I do agree with that. It's a very powerful candle. So we want to talk about outside bars. We're going to do some live gold trading, and I also want to bring something up here quickly, and it's on the previous trade I took on NCD JPY. So this trade right here marks the end of my winning streak. So this is the 10th trade. I did not get that 10 winner in a row, but this would have been a winner if I executed it well. If I executed it in the way that I should have executed it, then it would actually have been a winner. Now, I'm not going to go into great detail on what happened with this trade technically, but from a mental point of view, I did something which is very important. I had this loser, and I that ended the winning streak. And first of all, I felt great about that. Felt like didn't really feel anything. I'm just was completely calm with the fact, I saw that stop loss getting hit, and I'm like, yeah, that's okay. It doesn't really matter. Like, I'm just going to continue doing what I'm doing, and I look at the equity curve, and it's just a small move to downside in an overall very, very bullish equity curve. But there is a very important aspect of this, and that is the fact that this trade should have been a winner if executed properly. Okay, and that is a huge deal. And
it is.
So Yeah, it is. It is. And I asked myself, the first question I had to ask myself was, did I overtrade? Because I know that one of the most common problems in trading is overtrading. And it's also one of my biggest problems in trading. So I had to ask myself, did I overtrade? And it's very easy to answer that question. You look at the setup and then you ask yourself, was this setup part of the system? Was this a signal that was delivered as an entry trigger of the system that I'm usually trading? And the answer is yes. Therefore, I'm not over trading. It doesn't matter how many trades I take, as long as they are signals based on the system and they're proper trades based on my edge, then it's not over trading. Over trading to me is when you start taking more trades than what your system is delivering. So if you take a few trades that are not perfect, it's not really what the system is delivering, then that is overtrading. So I didn't overtrade. Okay, so that was not the problem. So what was the problem? The problem was that I market entered at the wrong area. I could have gotten in on a retrace lower, and then this would have been a winner. I could have been getting a better entry. And it was so obvious after the fact. So I have to ask myself, why is the mistake so very obvious today, but I was blinded yesterday? Yesterday, when taking the trade, I didn't see this mistake that was very obvious in hindsight, which is today. So I went through the trade idea again. I looked at price action and I looked at the type of price action that I had at the time of entering the trade. And it was clear to me that, and I made notes as well. So right before entering the trade, I made notes, not in my trading journal, but I got a personal pen and paper journal, and I made a couple of notes. And in those notes, I said, I'm feeling a bit stressed. Again, then that is the sign. That's the sign that I need to take a step back, because it's better not to take a good trade than to make a good trade a bad trade. All right. So I, right when I wrote, I'm feeling a bit stressed. That's my signal to take a step back, go out on the walk, do something else. But instead of doing that, I market entered despite feeling stressed. And that stress, I realized, came from the fact that I was greedy and I started feeling FOMO. I had a candle moving and I entered on that bullish moving candle because I thought that it's definitely going up. So I started feeling stressed because intuitively I know that I'm not trading the way I'm supposed to be trading. And that sign was me writing the word stress in my journal. And this is important because I believe that one of the reasons that I missed this mental error was because I haven't had a losing trade in 4 weeks, and I have not felt that feeling, in 4 weeks, which is a month, which is quite a long time. So now I'm getting that feeling, and I failed to realize that that was a sign of me needing to take a step back. So what I need to do now is, constantly be active with my journal and my like mental analysis, because I'm, with the technical analysis, everything's working fine. If I would have followed this trade the way the system is designed to do, I would have had a winner. But what I failed in was the mental analysis. So when I'm entering a trade, I have two things: the technical analysis, which I believe is, I don't really have a lot to work on there. I do have a system that works very well, but the mental analysis part, I've simply just ignored for the last couple of winning trades, because that's what happens when you get overconfident. You feel like you don't need to do that mental analysis because everything's just going well. So that's something I have to remember. Every time I enter a trade, think about what I'm doing, why am I doing it, and how am I feeling when I'm doing it. Now, these are the things that might not be very interesting to listen to. Okay, I know you're not coming to this live stream to hear me talk about my mental issues, but these are that you to need to put into practice yourself. Okay, you don't have to listen to me talk about these things. You have to listen to yourself. You have to sit down with yourself and listen to what you're thinking, what you're feeling, when you're trading, because that is what will separate you from the rest in this trading business. Because like Mark Douglas says in Trading in the Zone, the best traders, they think differently. That's what separates them from the others. They don't have a much better system because, there's not a lot of, you buy support and you sell resistance. It's not really more complicated than that with trading. But it's really your mental side that is what creates that level of expertise. Okay, that is Henry. On Monday, I will talk about my childhood traumas, and you'll hear all about that and how that affects me in my trading. Yeah, maybe not very interesting. We'll do. You know what, Henry? We'll do like a private session for that, not to bore everyone. You and me, Henry, we can sit there together, talk about all childhood traumas and how it's affecting us in our trading. Okay.
How is my audio?
Oh, fantastic.
All right.
Your voice
I
is
think
like a calm waterfall. It's something.
Well, thank you. But
Yeah.
yeah, you're making a great point. What you're saying, when I hear you talk about this, what I think is, let's not forget about the mental part of trading, because it is after having an edge, which is really the cornerstone of trading. If you don't have an edge, you don't have a system, you might as well not trade at all, because it doesn't make sense. Right after you may have the best mindset in the world, but with no edge, you're not going to win. Let's put that foremost and first. But once you have an edge, it's not enough. And that's the mental part you're talking about. You have a system that has proved to you that is profitable, right? And many people who are watching this, they too may have a system that have shown them to be profitable, yet only a
Absolutely.
minority of them are profitable. And only a minority of that minority is consistently profitable. And the number one reason for that is that they don't have the mental ability or the mental part of trading completely, mastered. And that's the next
Yeah.
phase after you have your edge. And it's very important, even if it's boring to talk about it for many people, because they perhaps want to see, flashy things. But this is, after having an edge, this is the most important thing, right? First is having an edge and how to get that, how to, analyze that, and all of that system building. But after that, it's the mental game you need to be able to master. And all those things you say about, not forgetting how to approach the market mentally, the mindset. You think you forgot how it felt to be in tune, in sync with your, awareness of your emotions, because that's what it's about. Being aware that you're feeling something, why, and asking, and stopping and asking, why am I feeling this? Why do I feel this nervousness? Why do I feel this FOMO? Why this, why that? And after some soul searching, it becomes clear, okay, it's because of this winning streak I have. I've been building that, tension, that, the loss is any time now, which is normal, because you will have the loss. Losses are part of trading. So it's very, I think it's a huge topic to discuss for our audiences.
Yes. Okay. Enough about childhood trauma, and let's talk about gold. Let's do some analysis on gold. I'm seeing in chat that people are really want to talk about gold. So that's what we're going to be doing. We're going to be talking about gold, and I wanted to share this with you because I do think that this is actually a very good example of why you need to be patient. Okay. So that right here, this is we talked about this yesterday. So we were trading here. Okay, so right here was we were trading around this area at yesterday's live stream when we talked about gold, and I said if we can get a break and retest of this level, then I would go short. So why is it important to have a break and retest and not only go short on the break or the breakout, if you will? Well, I'm going to show you that because we actually do have a very good example of a fake out. And a fake out is basically, you know what, I don't think I have to explain what a fake out is. I'm pretty sure that most of you watching here understands what a fake out is. If you don't understand what a fake out is, well, you'll learn in just a minute. So what happens here is we come down and we hit this level right here, and that candle, that wick right there, that is the fake out. Okay, so you see that the candle, it's on the 50-minute. The candle came down below the level, and now the impatient traders, they're going to put their orders here because they're saying that, well, now we have that's the break and that's the retest. This is why I always say you want to wait for you want a clean rounded retest. This is not a rounded retest. This is an immediate retest. And why you need a rounded retest is because you need enough time and space between the break and the retest for the market to accept that level as broken. If it's an immediate retest, then it's most likely just a fake out. So you place your orders here, maybe stop loss here, you want to take some profit down here. And what happens? Well, of course, it's going to go straight up and take out that stop loss. And this level is being used as support. Yes, Misha, we know we have news in 14 minutes. We have inflation data coming out of the US, which is major news. Louis says we should sell gold before France sell all of their gold reserve. Yeah, okay, so great. Well, I guess we'll sell gold tomorrow. Do you want us to sell gold right now, or should we wait till tomorrow? Do you have any specific time when you think that will happen? And we'll definitely jump straight into that position. No, I'm kidding. I will follow my technical analysis no matter what country is selling what, if I'm going to be honest. So yeah, that's a good example of a failed breakout, a so-called fake out, and this is why you want to make sure that you wait for confirmation. Now, looking at what we're seeing right now, I like to first look at the 4-hour. Of course, we'll look at the daily as well but we know that we are at that resistance area. So on the 4-hour, it's quite tricky. But I got two levels. I got that one, a little bigger, a little smaller. I got that one. I got this one. Go into the lower time frames on that. You see that I added that line based on the 4-hour closes right there. And if I go into the lower time frames, we kind of get a box here. I think we have something here, but it's quite difficult. This reminds me of last week when we were trading gold and we were just in a range. So I feel like what we need to do now is just need to wait for the news and then see what price is doing based on the news, and then we can perhaps trade that news move when it calms down. So, for example, if we get a move like this, spikes up, so this is on the 1 hour, and might say spike up here, and then we see price slowly but surely making its way down here and starts showing bullish reaction on the lower time frames, then maybe that could be a trade. And same thing to the downside. If price breaks down here and bounces here for a move up here, retraces, the beginning of the move, we might want to short that. Kind of basically what we're doing is we get a move based on the news, and then a lot of times you'll see price make its way back up to where the move originated based on the news, and that's where you can then trade in the direction of the initial move. And
yes,
we could also potentially fade the news move, but that's very dangerous because you don't know how far that move is going to go.
yes, I think you're making some great points there. Ways to trade the news: counter the initial move, which is indeed the less has less probability of winning, because you're basically trying to time the top, which is, of course, it's the catching of that falling knife. So it's very difficult. But coming back to the initial, I think that's the way to trade news, because it showed you and it comes back to a place of value. You have there is it's telling you, there is price action telling you where it should come back and what it should defend, which is the initial move or impulse. And depending if it rejects that area, that could be a trigger to get in, and then you go with the news because you want to be trading with the trend, which is in that, or with the momentum in this case, which is with the initial move. So those are great points. Let me show my analysis on gold. here we are. What I see is this: we have. I'll start with the. I'll start with with a daily in this case, or maybe yeah. Let me start with a weekly. I did mention this yesterday. We had a weekly bullish structure that came in and went out. Right, so it retested successfully, and basically that move, the move that is expected from this order block has already been done. So it's not relevant for an entry anymore. And the fact that it took out this high to me is the end. That's the target for that move, right? The high of this candle, one of the targets. So that is fine. We have a filled or a completed pattern. Then what we have is we have a bullish order block that was formed as it was retesting that move, and it left that bullish structure behind and hasn't formed anything yet in between. So basically, I'm thinking it's leaving a weekly order block and it's leaving a daily order block behind. What is the next structure, relevant structure it's going to go to, right? It's either going to be a daily order block, but we don't have anything to the left. So that makes it a little bit difficult. Where is it going to? We don't know. The only thing we have a point of reference is this high, right? That all-time high. So my idea is then if it's leaving this daily and we don't have any daily structure to stop price, right? It's likely to be breaking this high again. So that's one initial on the daily time frame. That's what I think. The other thing is we do have a right. We do have a quasi based on the H4, right? That being the left shoulder, the break of the neckline, and goes lower, comes back um, to this entry order block, and it does not continue. So that to me is weakness. It should, right? I can trade this order block again for a short if it breaks and makes a lower low, right? The second time it comes around, it makes sense for me to trade it because it will be a double top basically, right? But the fact is it didn't go that low, right? It made a higher low. That's weakness, right? So we have a reversal pattern on the H4 that is getting weaker. And we have the daily that is lacking of any reasons to stop right here. So basically, we have two time frames telling you that it's likely to continue up. The other reason I have is the following: based on price action, and of course, news can come in, and everything I said can be changed because the news can surprise everyone. It can go the other way around, but the opposite direction. But this is what is price. This is what we have to make up our minds, or based our setup on. What we have is we do have, right? I mentioned that the reversal structure is getting weaker, but the fact is this order block, this entry order block, is still valid. It hasn't been invalidated yet. So in theory, and it has a chance of still holding and price bouncing from it. And what do I want to see when that happens? I want to see some rejection candles like it did before. Look at that bearish engulfing, right? That's one example of a very clear, obvious rejection of that area. And that's what I want to see for price to do again. And we did get something similar. We did get an engulfing here, but we didn't have follow through, right? So it's giving us the sign that it wants to reverse or go lower from here, but we don't get follow through. Furthermore, it forms another one and fails to go lower, right? So there's a story here how the buyers are trying to, taking over control, but they don't have follow through. On the third occasion, it forms even a bearish outside bar that we'll be talking about later today. That's a strong sign. That should be the, the sign for every sellers to come in
Yeah.
and sell this. And what does it do next? No follow through. What does that tell us? The sellers are unable to gain control durably, right? They did
I
take
like
control on.
I like how you're looking in an area that is very condensed. That there's a lot of candles in one place, and when I'm looking at this, I get a little bit confused. It's very messy when I'm looking at this, but you are able to pull out one candle and then you say, this one candle right here is, an outside bar. So I like the what is it? The skill
Zoom
that you
out.
have.
Oh, okay.
Yeah, you can, but you have this skill where you can pull out one candle from a very messy range. While when I'm looking at it, I'm getting confused. And I like your analysis here that you're saying that there should that price action is bearish. There should be more selling pressure in this type of bearish price action, but we're not getting that. So that is a sign that the sellers are just too weak, right?
Yes, indeed. They with the first, the first time around this happened, the sellers didn't need a lot of uh, stimuli to get into the market. They saw this, and as it was happening, they sold this massively, right? And that's not happening here. So that's the change in behavior in the market. That's the price action. And that's the narrative. At least that's my read on the narrative of both sides, the participants, because basically that's what's happening. The bars are formed by the collective move of each side, taking or not taking control. So, and if I follow the analysis that I was doing, so we had one indication, right? That indication that should be enough for price to start going down. Didn't go down, right? We had another engulfing, didn't go down, right? And we had a third one, a outside bar. I should think now this is the moment. Now we're going down. Third time will be, the perfect a time around, and it doesn't go down. Instead, it forms a bullish order block, right? Does an engulfing, and even it overpowers this outside bar. That is a lot. In order for you to do that, I mean, as a market, one side of the market, that means there is there you need a lot of buying pressure, a lot of buying interest to do that. So that speaks for bullishness of gold. In spite of all of this, what we have is, so we are in a supply zone, right? So we could seal, even with everything I just mentioned. We could, the fact that it failed 3 times tells us that the probability of it succeeding the fourth time is not very high, because it's weakness for the sellers. But it doesn't, that can change in the future, right? This is only based on historical prices up to this moment. It can change, let's say, with the news, right? The news can show bearish order blocks or structures or price action, and then it starts on the fourth or maybe the fifth attempt, right? But with each attempt, it's getting weaker. So I think it's more likely to be going higher, unless the news, changes everything, which we don't know. I try not to have an opinion on the news, what an expectation, what it will be about, because that's, to me, is, for me, it's gambling, since I don't have an edge there. So, my plan for today and for gold would be, if I see, right, I know this is weakness, right? So where will I be going long? Since I think it's weakness, I should be wanting to go long, right? The area for me to go long, is, of course, the area where price previously showed us it wants to, the buyers came in, which is this bullish order block on the H4. So as if price is coming back into this area, price, that's the news coming out. Let's go to the 1 minute. There you go. That's a huge candle on the 1 minute to the upside. It's a, what? How much is this? This is, well, for gold, it's still big, but uh, it's about $10 move in a couple of seconds. So that's quite
I would say
significant.
it's not a huge, like, super
No, it's
super
not a
big
huge
move.
that. Yeah,
Um,
but it's
so
a
I
clear
think
move.
I don't know what the numbers are. Let's see if I can find any numbers here. So yeah, the for it's year to year is 2.9. 2.9%, forecasted 3%, year-to-year actual
Slightly
3.2,
lower.
3.2. So it is, no, it's as expected. Month-to-month actual, month-to-month core CPI is as expected, it seems. So pretty much as expected. So yeah, we usually what I'm thinking is when we get news coming out and it's as expected, then the previous price action will probably continue. So the analysis that you uh, I guess it's 1
One
point lower
decimal
than
point, yeah.
expected. If you look at
Yeah.
year-to-year actual, it's 2.9 and forecasted is 3. So it is slightly lower than expected, which I guess in current situation should be risk on, bullish, right? Should be bullish gold.
It's CPI's inflation number, right? So it's
Yeah.
gold is as a hedge, sometimes as a hedge for inflation. So if for lower inflation number, that's not good for gold, right? In that kind of rationale. So if inflation is higher than
I
expected, then
I just want to show you guys something. Sorry, I'm in a Euro JPY trade here. I'm going to show you this perfect entry right here. Look at that right there. That is such like right before the news, we had that test of that entry area, and if we ignore the move from the news, that is so. I love when
perfect.
you're getting entries like this. Very nice. Okay,
It's
so
a
yeah,
it's a
we're not.
it's a confirmation. It's a confirmation that the level that you drew is relevant. I
Yeah,
see that a
exactly.
lot with the order blocks when it reacts in a certain specific to the pipette.
Yeah.
Sometimes I know it's that's not coincident, and when it happens more than once, when you see it a couple of times each time, or each period, that you're onto something, and that's always nice to see.
This is a really good comment, Misha. Like I've experienced this so many times, and I'm not saying this just because we're on the 5ers Live Trading Room and I have the 5ers written all over me. It's because I have different accounts with different firms. Okay, I'm not gonna lie. I also have my personal trading account on Oanda, and there has been moments where I'm getting stopped out on every account but the 5ers, and that's because the spreads on the 5ers is so incredibly tight. Wow, gold is moving. Let's ignore that for a minute and actually look at gold. Whoa, that is okay. So
Yeah,
now we have the move. Okay, so we have the move, uh, and it's a bit weird though because the initial move was to the upside, but I would say that we're still seeing the initial move, aren't we? I would say that this is
it depends
potentially
on the
part
time
of
frame.
the
No, it depends on the time frame. If you're on the first reaction was to the upside if you're on the 1 minute, but once you zoom a little bit out, it's just one candle. So if
yeah.
you zoom out, the longer it stays below the entry, the open of this candle, it'll become the initial move will be to the downside.
Okay, so now my idea was if we get a move down, then perhaps we'll see a bounce here, maybe, and a move higher, and that would potentially create a good shorting opportunity. That's what I'm looking at right now.
Yes, what I'm doing is I'm looking for areas, right? Taking that rationale into account. That I didn't finish my analysis.
Yeah, no,
To
sorry about
the
that. I'm just jumping straight in and
no no
taking over. So just bring up your chart, man, and continue with that analysis.
no, I didn't mean to say it that way. But what I meant to say was that
Yes, you
I
did. Yes, you
only
did.
well,
No
maybe
worries,
I
man.
did a
Let's go.
little. But I shined some lights on the buy side where I want to be buying. This is the area to me that needs to be defended. And of course, I don't go just buy it because right now it's in there, but that's the area that I want to go and look for refinement. I don't see anything on the H2. Do I see anything on the H1? I don't. So I need to go to the lower time frames. And there I can find perhaps I see this area very interesting. It's pre-London, so that tells me something about the possible volume that formed it, but still, that's and the only thing I got. So I will have a 30 minutes, and I think the area is around here. This is the area that I would like price to come into as a refinement of that bigger H4 order block. And when it does get into that area, I want to see rejection on the lower time frame, right? So I want to see it. Of course, this is not the typical way I use my system because I don't want to go against the news. Okay, so you don't want to, you want to be very, very picky with these entries when you're going against the initial move, right? However, if you have if everything is, showing you what it should be doing, then I'm okay with going against the news, which is, so I want to see now my area is no longer the higher time frame. It is based on the 30 minutes because that's the best thing I had. So I'm going to mark this area as the area that I want price to come and let me zoom out a little bit to get this right. So I want price to come in and react favorably in this area. If it doesn't do that, then I don't do anything. Although, of course, that's based on my system. But I mean, I could enter long, even I see some flimsy trigger, just so we have a trade on for the live stream. So this is the area that I think if it is going to reverse, this would be a great area that it could reverse from. It hasn't really gotten to it, so maybe it will never come back to it. Maybe it still has some possibility of doing this as it is getting out and continue to that higher time frame analysis. That's one thing. That's the buy side. So I have a buy setup or a buy scenario. The other thing is, and I think this is less likely to trade, but still, if everything lines up, I would like to trade this as well, which is we do have an area where the quasi, which is getting weaker, so it's a less probable area. It's not as great, but the order block is still valid. It hasn't been invalidated yet, and it had 3 attempts to go lower and it didn't. But that doesn't mean that maybe in a couple of hours it then starts and on the 4th attempt and then has follow through. If I see that, then I want to short this, right? So I have both sides. I have a plan. I want to go long in the absence of a new structure on the, let's say, on the 1 minute. But I don't think that will happen with everything we're just seeing. But if it starts going and let's say it goes to this area and then doesn't get followed through, but instead forms a bearish order block, a quasi, then I want to be in that when it forms that right shoulder to go, because as long as it doesn't invalidate that bigger quasi that I mentioned, this order block, as long as the H4 doesn't close above it, right? If it hasn't closed above it, it's still valid. Although I think it's inferior, it's still valid, and I would still want to trade it, because if price is telling me it's reversing down at an area that I already have on my chart as a valid supply zone, I want to trade that. Doesn't matter if it's on the 4th attempt on price action, because price has its own timing when it does things. You do not get to decide when price starts going one direction. It may go sideways for a long time and then starts showing you what you need to see. So, and if it does show you, we should listen to price, right? Price action is king. That's the price action decides what we do or what we don't do. So basically that's my plan. It hasn't reached my area yet. And that's the complete analysis. So I have a on the back of my head, I do have a sell proposition or sell plan, but I don't see enough reasons to go to be ready to go that sell, since to me this is showing me it's going to go higher. We'll have to see if price action on the news changes, right? If it starts going below this low, then what I just said starts getting invalidated as time progresses. But this is the area that I want price to be reacting off, and it just missed it by a little bit. And actually on the 15-minute, I didn't use the 50-minute, but we almost touched it. I prefer to keep it on the first bigger time frame we had. I would have wanted something on the hourly, right, which is more significant. And in the absence of that, 30-minute is the best we can get. So I that's why I have this area and not the 15-minute. Yeah, that's basically
makes sense.
what I have. Price is forming an outside bar, which is very typical of news, because of course the news comes with a lot of volatility, and that volatility will take both sides of the range of the previous candle, and automatically you will have an outside bar. Which,
yeah, that's a great good analysis, and like people are saying in the comments as well, very much appreciated, very good detailed explanation, Victor. I want to bring up one comment from Ed's J. He said, I was right. And I'm like, I gotta go back. Did he actually mention this? Yes, I think he did at about 8 minutes before the news. He said 2,463. So let's put 2,463 on here. 2,463.
I got it.
That is pretty good.
That
that's a very good prediction right there. And yeah, and like, you might look at this and say like, oh, that's magic. But when you zoom out, you obviously see that it's a very good level right here. It's an untested breakout level, and this is just the nature of price action, right? When you learn to read price action, you understand that if price goes down, an untested level like this one is usually where price will find some type of support, at least on the lower time frames. But this is a really good prediction right here, and like he says as well, something with an FVG area, fair value gap. I guess that's ICT language right there.
Sure.
But
Yeah.
simple stuff right here. Just to basically coming back down to an untested level, support area. Very cool. And hopefully you made a bunch of money on that if you're not on a high stakes account. Otherwise, you would not have been able to keep that money, because that is called news trading, which is not allowed. Not 2 minutes before or 2 minutes after the news. Okay, so now we have someone saying 2483. Well, I didn't show my screen when doing that, but yeah, it's you.
That's the all-time high.
Yeah, basically this is the level where let me see if I can. Yeah, so that's the level that he said, it's J 2463. That's the level. And what I talked about was basically this level right here, that it's a untested breakout level. And it's a very clear level on the lower time frames. And when you see something like this, usually you can expect with certain probability that there's going to be some type of reaction, at least on the lower time frames. So that is a very good level right there. And then also we have 2483. Let's add that 2483 as a potential.
That's the all-time high, and that's a very a common place to be selling for a lot of traders, since they expect a fake out or a taking liquidity on that side, because a lot of stops, and rightfully so, a lot of stops will be there. Everyone who thinks this is a short for whatever reason will say, okay, if it isn't, that was the last place that I would still think this, that will invalidate the setup. That's the last place it invalidates. So that's where I'm going to put my stop, above the last high, which happens to be the all-time high. So yes, it's a great area to be looking for a short. However, you do have to have a sign, a trigger, a validated way to get in, because a lot of, not, it doesn't work all the time, of course, but it does work a lot, right? But you need to put that into the right frame, right? Frame your trade correctly. You don't get stopped out before that reversal happens.
So I'm basically just waiting for some type of price action that makes sense here. The first initial idea was, we had a move down as we watched price action here. We saw that, I would say that the move came down, and I said, when we come up to the area where the move originated from, which is this level right here, I wanted to short that. But now price action is actually looking quite bullish. I'm getting more of a bullish feeling here, which means that maybe I actually want to join this move to the upside, because it seems that the CPI numbers have now been absorbed by the markets, and price is now returning to the previous trend. And if you look at gold, it is quite strong. It's very strong, and it looks like it wants to continue higher. Although we're at that high time frame resistance, so it's a bit, I don't know, seems a bit scary, but I'm gonna put alerts here. I might want to short it here. Might want to go long if it's above that level. We'll see. We'll
Which
see what
level
happens here.
which level are you looking at?
So short below like 2469 area, and it's actually hit that alert right now. It's actually coming lower. So I might actually short this based on this 1 minute candle if it closes, and of course this is going to run away, but we'll see. I would TP, see what happens here. I would probably TP down here. Okay. See if I can get filled on this one.
The 2-hour candle will close in 12 minutes. And if it forms a bearish order block and it's an outside bar, that could be a place for me to look for a short.
Okay, so I got orders in for this one. But if it continues lower, if it continues down here, then I will cancel those orders, because I don't want, like, yeah, it's not looking likely to get filled here. I don't want this move to, go down here, because I think a bounce down here would actually help me to secure the short. So yeah, let's see if price. So now it's pausing. You can see that it's pausing here. If it continues lower, then I am not feeling super good about this. Let's see.
What I want to see is how price behaves as it takes out that initial move. Does it start weakening and forming reversal patterns or rejection candles? I will switch to mine to forgive the audience some visual. To me, this is the area, right? The area I want to be going long from, right? And I know so far the news seems to be a negative, a bearish impulse for price. So that's not something I would like to see. But however, still, if price comes in and takes out this low, it will be in my area, and I want to see what it does there. Does it just have small retracements and just continue like this? Then I don't want to touch it, because it's probably is going to continue to go down, right? And if it comes back, let's say to this area or to some other bearish structure, then I don't want to touch it. However, if it comes down and it gets into my area, it may even wick it. I don't mind, as long as it leaves, let's say, a wick, right? And then start building that bullishness again. If it does that, then I want to be part of it, putting my stop below, and I'm going to be targeting this to begin with, this high, because I think then price will resume its uptrend that we have seen the last couple of days. That it's, well, couple of days maybe is a big word, but next couple of bars where it is switching back to go long, right? What we just mentioned, it was meant to go short, but it never, couldn't have that follow through. However, now that we have the news out, right? Remember I mentioned I have this I'll take out this line, but I have this red line here because this is the pivot on gold. And if you look before, it has been respecting today that pivot very, very nicely, right? Breaks out of it and uses it a little bit as support, goes up, but then not again, and uses it again as resistance, and before as well. So that's a clear area we can use in the future. The other thing is the sell scenario, right? I mentioned that if it forms a structure, a quasi on, we didn't have this order block before, but if it forms it in the relevant area, which is this H4 order block, the bigger the bigger structure, I want to still go. It's something that I have as a reserve plan, but I still want to go short if it shows me the right thing. One of the things it can do is, let's say it closes on the H4 as as an outside bar, right? We'll talk about that a little bit later. But if it forms that, and it seems like it's going to do that, then I have a reason to short this, right? If when it comes back, if it does that, I can then trade this way. I don't know if it's going to happen, and if the news is the catalyst, sometimes it doesn't come back, again. But if it does come back, then this would be a area where I could be looking for a short, because that to me that's where it's close to where that idea will be invalidated, so long as it doesn't close on the H4 above that order block. Because if I lose this order block, right? If I lose this order block, I lose. If it is invalidated, that to me is a sign. If it is invalidated, that to me is a sign that basically I don't have a floor to stand on anymore. It's the basis of the whole idea. So I have to keep mindful of that structure on the H4, see if it is broken or not. You got some profits? You're muted.
Yeah, no, I tried to press this like graphics here, but yeah, we need to get a new one like that. We need to get a new one. But I wanted to, now that I've successfully interrupted you with that graphic, I can quickly just switch over to mine and show you guys this. So I've removed my orders here. You can see that I've almost got filled on that one, and then it went straight down. So looking at this, I've removed order when we got that candle right there, because now this tells me that my idea was correct. My idea of direction was correct, but my execution was flawed. Looking at this in hindsight, that wick would have been my entry, and then I could actually have a lower stop loss, and of course the FTA on this lower time frame would have been that. So this would have been the setup, and I might have just as easily been filled on that one, but now the idea is gone. This was basically the move I was looking for, and this is how I trade news events basically. So if you look at the 5 minute here, you will see that, well, actually the 1 minute is beautiful for this. You have the initial move right here. Where did the move originate from? It originated from this area right here. And so this is the area that I want to short. I basically want to trade in the direction of the initial move. Okay, so the initial move back to where they originated, and then you have this candle. This candle right here confirms the direction. And when you have that candle, I'm looking to get in on a break and retest basically of this level right here. So placing my orders on the retest, stops above, well above the area where the move originated from, and then TP at the last the FTA, which in this case is the last local low. This is a pattern that plays out in many different markets, not only gold. It plays out in almost, I would say, most markets out there. When you have news events like this one, I trade Bitcoin with FOMC. Bitcoin moves in this pattern during FOMC very nicely. So when you have I think it's when you have the Fed interest rate decision, then first they have the interest rate decision, and then they have the press conference. So they first announce interest rates, I believe, and then they have the press conference. And what's cool, a cool thing you can do is you look at the initial move before the press conference, and then you fade whatever move you get during the press conference. And it's the same thing here. Initial move, back to where the move originated, and then you trade in the direction of the original move. Okay, Victor, sorry for interrupting you, but I just wanted to show this while it's actually happening. And now you can see that price is back at where I was supposed to enter, right? So the trade worked out quite nicely. Well, I guess it didn't because I didn't enter, but the idea kind of worked out quite nicely. But
Yeah.
that's it. That's what trading is all about. Sometimes you'll get in the trade, sometimes you'll miss out.
Yeah. It depends on how selective you are, and being selective is a good thing. But that obviously means that you'll not be getting triggered on every movement there is. And what you
Yeah.
explained about the typical move of news event, where you have the initial and then it comes back and then you have the actual move, that is that's basically, if you just change news with order block, that's how I trade order blocks, right? So you have the initial move which creates the order block, and then it comes back to where it initiated that impulsive move, and that's where I look for my entry to go in that whatever direction the initial move is, right? The direction of the order block, of course. So it's I think it's a it's like a template to be used in different concepts, not news, and also order blocks, and perhaps other things as well. I'm sure
Yeah,
with other
definitely.
things as well.
And I think this pattern also shows why it's so difficult to as you say, catch a falling knife, because it usually comes back. Like, you see this and you're like, I want to enter this, I need to enter this, like that move, that's the move I want to get in on, and then it comes back. And a lot of people, they not now, we're not talking about potentially a news driven event, but we're just talking about like some breakout, right? Used to breakout, and you want to get in on that breakout. So a lot of times you'll enter short here, and your profit target, because you're getting a bit greedy, right? You're getting a bit greedy, so you want to make some money, because you think that the breakout is going to go way further down, because there's so much momentum here, and then it pauses right after your entry and it takes out your stop. Very, very often does that happen, and that's also why breakout traders usually have quite low win rate. They have high risk to reward on the winners, like very high, but usually quite low win rate. Now, I'm not a breakout trader. I never traded breakouts, but through my testing and through talking to a lot of breakout traders, they do say that they have fairly lower win rate. I know Peter Brandt. Probably know about him, right?
Yep.
He trades a lot of breakouts, and I saw he wrote something on Twitter about him having on a specific setup like 14% win rate, but the winners are just incredibly big. Yeah, lesson is don't trade breakouts, I guess.
I think trading breakout is not easy, and it's something
No.
very popular. And a lot of that's the first initial thing. Even if you're not a trader, you think, okay, it's breaking something familiar and it's going to continue. But in reality, yes, it does do that, but it does it in different ways than you think, and different time frames. And good luck finding where it's putting your stop at the best place. You either you put it much away, and then it means that you need to be in the trade for a very much longer time for it to reach your TP, which means that you're basically betting that the breakout needs to be a big breakout, and that's even less likely to happen, let alone breakout. There is a good chance that it may fake out, not break and continue. And expecting a bigger move, a bigger than usual move, is even less likely to happen. So
Yeah.
I'm basically I'm still waiting for price, right? If I put my chart on, I'm still waiting for price to come to that area, and I'm starting to see that after the news, the more time progresses, the less I want to be entering here. And the reason is, if for this entry to be a good one, I want it to go quickly there, right? And then either stay there and then show me it wants to go up by breaking that by forming some structures and coming back to them and do something like this. But what I don't want to see is that it does it in the way it's doing, which is a not a quick move to the downside, but it started. There is that wick, of course. Uh, it's making lower high, and maybe a lower high, and then that's more like a different kind of way getting to that area, right? Still, if it does what I need for it to do, which is show me a reversal pattern in that particular area, I might still be interested. But the fact that it's doing it uh, this manner doesn't speak well. I mean, it tells me that now we are in a bearish kind of price action, right? Because it's making lower lows, even though it hasn't lower highs. I mean, even though it hasn't, changed completely in terms of the market structure, it hasn't made a lower low, but you can see the weakness as it is making it's having difficulty when it gets higher. Look, that on the 1 minute leaves you a bearish candle, right? A engulfing. Here it leaves you two, and it's leaving you another one there, right? So it's building that selling pressure, and that's not how you want to be seeing price action. If it's going to be reversing from here, it can still happen, but those candles closing as bearish engulfing, all right, it's only on the 1 minute. I give you that, but that's a news event. You have to go to a lower time frame for your price action analysis because everything happens much quicker. So the 1 minute here, you might equate it to maybe the 5 minute when there's no news, right? So it's a bit more important now because it's after the news. So, and that's what we have. So we have bearishness building up, and that makes me, think that perhaps this is not going to be the area. It's not gonna, really reverse from this area. And of course, it's fine. It doesn't matter what my opinion is, because in the end, what will happen is either it's going to not form a reversal, and that's fine, right? I let the price tell me that if it doesn't form a reversal, since the reversal is my trigger, I don't get a trigger, and that's fine. If the but however, even if it gets there in a manner that I don't like, right? It's not of my preference because it's building bearishness, etc., bearish order flow. If it does get there and give me what I want to see, then I have no reason to not trade it. I still will trade it because a trigger is a trigger. If it does everything in the list, has the higher time frame area, is it relevant or not? Yes, it is. Then, and it has alignment. Yes, it goes there at the time, and it forms those reversal pattern. I have nothing to argue against that. So if it does form that reversal pattern, I will still be taking it. So I just let the price action tell me what it wants to do. And sometimes it doesn't give you a clear idea all the time. It's not like it's you can force the market to tell you buy or sell. It doesn't work like that, right? You got to be vigilant and waiting, and maybe it happens right now, maybe it happens in, I don't know, an hour, 2, 3, maybe tomorrow, right? That thing that you're waiting, that you're expecting as a trigger, may or may not happen. But what I see is the look at that. This is on the 1 minute, we have this order block. See how price is getting very close to it, didn't touch it, but it rejected before it got to it. And we see this again. That's the sign of bearish order flow. Look at that. That's the 1 minute order block. These are not entry order blocks. They're just regular order blocks. You see how it reacts. This one almost came to it. This one, it touched it and reacted bearishly to it. So that's what I mean. That's what I see in the market, and I see that bearish order flow coming in. Even if we don't have a trend, trend yet, with lower lows and lower highs, right? But you can already read how the market is doing forming those structures. And let's see on the higher time frame to see if we have something else. On the 3-minute, right, it's the same thing. You can see that bearishness also. See that? The more time frame it's visible, the more relevant it is, the more significant it is, right? And you have it. I don't think it will be on the 5-minute. It isn't yet, but we only have one order block. It's not, one is not very significant, but we have 2 in a row. Then that tells me a little bit more confidently what the market is trying to do, right? So basically, what I try to do is put my ear on the ground to listen what the market is trying to do, right? And if it aligns with what I want or I expect it to do, then I act. If it's against what I expect, then I don't do anything, right? So I wait for the market to tell me if that scenario, that buy scenario, is a good idea or not. And we'll have to see. You were going to say something?
Yeah, so I took a short trade here on gold, and you can see that it's, I'm going to break it down for you guys so we can, so we came up to this area, right? I had the first initial idea was to short here down to, down to that low. And so that was the FTA of that move. And then when determining the FTA of the next move, going to be that low right there. But let's talk about entry first. So using the fib tool, we're going to be adding right here. And one of the reasons why I also shorted this was because you're looking for price to go lower, and listening to your analysis, it kind of makes sense. And we're looking at the markets from 2 different perspectives. Like I don't really like, I'm not like you said, put your ear to the ground and you try to listen to what the market wants to do. And that's not really what I'm doing. It's not really how I'm feeling about it. Like all I do is just I get a specific signal from price action, and that's about it. And I do appreciate that approach where you're looking at different candles and you're kind of like trying to feel where price wants to go. While I don't really think in terms like that. I just take whatever, like if I get an entry trigger with all the stuff I'm watching, if that triggers, then I'm just going to go in. But you explaining your analysis definitely increased my bias short. So adding the fib retracement tool here from that high, because that's where this move originated from, and then down to this low, you'll see that we come up and we test that level very nicely. You can add a level on those candle close. So you'll see that it's a very good retest of that level right there. You see the wick hitting that level perfectly. And then the next candle on the 1 minute is what confirms this setup. Now, I'm not going to lie, I got a fairly, no, actually, this is the next one. I got a fairly bad fill on this one. I entered right on the close of this 1 minute candle, and didn't really get filled very, I think it's something with my copy trader being like there's a slight delay with the copy trader, and there's also volatility, right? And it's on the 1 minute, right? So the fill, I didn't really get all the profits I wanted out of this trade, but this is the setup, right? The stop loss, I want, usually I want to have like stop loss above the reload zone, but in this case we have a very clear invalidation with that high right there. So stop loss comes above that high, and then TP again, like I mentioned in the previous setup, that was the FTA. Now the FTA is to the right, which is that one right there. So TP is going to be right on that level, and you'll see also one final thing for this to work is I want to have the stochastics RSI. And the stochastics RSI, I love to use it on the lower time frames. It works very well on the lower time frames, and I want that to be above 70. So you see right here, stochastic RSI above 70, and also on the next candle, the stochastic RSI, you also get that bear cross. And sometimes waiting for that bear cross adds another layer of confidence to this trade, because a lot of times at the top on the stochastic RSI, you first have a bear cross. And on the lower time frames, that will usually mean that you have some type of top with price action. So that's the trade, and then down to that TP. And now, what's cool about this is you see that FTA. That there's a reason why I'm
hit
taking.
TP already.
Yeah.
Oh,
So
nice.
the reason why I'm using that level as FTA is because look at how price is reacting to that level. This is the FTA of the first setup, comes down, up. FTA comes down and then up. Like the first trouble area is the level where you can expect price to have a reaction. It's the very first level where you can expect price to have the reaction. And for price to go lower, it needs a lot more power. It needs a lot more sellers, right? But that's the idea right there, and I think it's a pretty good example of how the type of confidence I want to see across indicators on the lower time frames. Let's see what so actually it's really good example of the EMAs as well. You see how the cloud here between the 20 and the 50 EMA, it's just moving very nicely with this low time frame trend right here. Now I'm adding a lot of different indicators on here, but honestly, if I'm going to be completely honest with you guys, you can just remove everything right here. Just remove everything, and then what you focus on is this right here.
Could you put on the 13 EMA on the 5-minute? And look 13. All the 13 EMA on the 5-minute, and look all the nice reaction of all these highs had with the EMA. You can blow that up a little bit. You can see how the closest respect them, right? And then the wick, it starts to respect them. That's doesn't mean you have to sell it based on the EMA, but if you look at the market, when there is an impulsive move, a lot of the times the 13 EMA on the 5-minute is one of the most used EMAs, where it touches and then reacts, continues, touches, react, continues. So I used to, you can use it in as a trailing mechanism for trailing stop.
I like the 20. I think the 20 doesn't give you as many touches, but the 20, I like the 20, and you can see right here. Like what I like to do is I like to look at the 20, and then just imagine that there's a buffer zone around it like this, and this general area around the EMA is the area that I like. But yeah, the 13 EMA is commonly used EMA, especially with I know that bigger players are looking at the EMAs, and also a lot of algos and are looking likes to use the 13 as well. I get a quick question here. What do you think about using the stochastic RSI cross, for example, as entry trigger? Yeah, you have to use it in combination with something. So you can't just look at the stochastic RSI like a cross as an entry trigger. You have to add it in combination with something else. And what I find is engulfing candle with a cross and a stochastic RSI is a really good combination. So you can see here, you can look at, for example, we have this is not really a bearish engulfing candle, but it's very close to being a bearish engulfing candle. So just for the sake of this example, I'm going to say that is a trigger candle, and that happens up here. And then the next one, bearish engulfing candle right here, and then right here, bearish engulfing candle right here. So combining clear bearish candles with a bear cross in this case would have given you pretty good entry. Now, if we flip this around, look at that. A bullish candle at support, bull cross, bullish candle at support, bull cross, bullish engulfing candle at support, that. So when you combine this, now, of course, you can just remove the stochastic RSI indicator and it would be actionable. But sometimes, like, what if you have, what if you get a bullish candle right here and stochastic RSI is up here? Maybe it's going to go lower, right? So maybe this is a good example of when you see this structure failing. But if you use the stochastic RSI on the lower time frames and then you combine it with engulfing candles, that is going to increase definitely increase the win rate of using the stochastic RSI. And then, of course, it's not only about looking at candles and indicators, it's also about looking at where where the engulfing candle is being printed. Because to me, this candle right here, which is an outside bar as well, means nothing, because it's in the middle of support and resistance. So this means nothing. Same thing with this pin barish candle, or this breakout candle. It means nothing. I'm not going to be buying that. I'm not going to be selling that, because it's right in the middle of two important areas. Victor, I have to run 2 minutes. I'll be back in just 2 minutes.
No problem.
Okay?
Yeah, sure. All right. So I'll put my screen on. What we've been looking on gold is we haven't had that move back to the H2 order block that has been formed. That may still happen maybe later today, right? This kind of move. If we are really going to go much lower, it makes sense that price will come back and retest some structure, some bigger structure like this one, or it may choose just to break this first and then come back, maybe retest this broken order block, and then use this kind of pattern. That's if it is indeed going to go down, which it looks like that's the prevailing direction it wants to go, right? So the dominant is looking at, it's a bearish outside bar on the H2 and on the H1 as well, but the H2 is bigger time frame, so I'm gonna consider that to be the one we need to watch. And the other scenario, right, the buy scenario is still possible, right? And that's this area. We do have an order block here on the 5 minute. I don't trade it that way, in the sense that it's not an entry order block to me. Let me double check if that is the case. Actually, it is. It's borderline, but it is. So depending on how it reacts to this order block, that might trigger that might be a signal. However, what I prefer to see is a new reversal, right? So not based on this quasi, right? If you see this, right, this is the bigger time frame quasi, which is not the time frame, but zoomed out quasi, which is this reversal, right? In order to have a reversal pattern like a quasi, you need an established trend, right? If there's no established trend, then there's no reversal possible. So that's the bullish reversal, and it's coming back into that area. And the way it's doing it tells me that it's not likely to bounce from here, right? So we'll have to see. We'll have to see if we go lower time frames to see how it reacts as it gets into this area, right? This whole area is important, but especially that 5 minute order block. And even if it doesn't, give you a clear, like a pin bar or some other rejection from that area after it touches it, if it still does what it, does a reversal pattern, not necessarily from that area, but maybe even here, that is still, as long as it doesn't, close outside of that place of interest, it's still somewhere you could be, it could trigger a long. Even though with all this bearishness from the news, the market can change and it does look scary to get in. But I've learned to, not think about that. It's, if it signals, I get in, even with, all this bearishness, everyone thinking it's going to go down. I know, and that's why I have a low win rate, because typically, what's most obvious, that's the one that will happen. It will typically, that's why I have a low win rate. It will break that area and I get stopped out. However, the times that I do get it right make up for all the other ones, right? Because I get in with a very tight area, right? As you can see, this is, what is this? How wide this is? This is less than $1 in price, right? So it's very tight, and that allows you, if you get a move, let's say to the FTA in this case would be, the H2 order block, right? So if you get a move, and right now it's invalidating my plan right away. And as you can see, it doesn't matter, right? Because it never triggered. It didn't. I think that's the beauty of when you wait for the confirmation, when you listen, and you don't just go in because you think that's the place it's going to reverse from, because frankly we don't know that. So you have to wait for the market. Let's look at the 1 minute. It closed below that, but that's a 5-minute entry, and it closed below that as well on the 5 minutes. So basically, this order block is gone. The 30-minute is in about 10 minutes, and if it closes below there, then this order block is gone as well, and the whole idea of going long is off the table, right? If that happens, and right now it's already telling me that it's just weaknesses coming into the market, right? So you have to be flexible, and that's what I just did. I had an idea. I think it's a great place to be buying here based on the order blocks, based on the structures. But if the market doesn't show you, the behavior that goes with that expected move, you shouldn't be stubborn and think, no, it has to reverse. No, it doesn't have to reverse. The market does whatever it wants, right? Only when it does when it does what it's supposed to be doing according to your scenario, that's when you have to act upon it. And coming back to what you said, Jonathan, what I heard you say is that you have a mechanical system, and you don't rely on reading price action in the sense that it doesn't make any difference. Of course, you do read the price action, but your system and your signal and your trades are not based on how the market necessarily behaves or shows. You only, if it does what it with your indicators and your rules, then you get in. And that's, I think that's the best way to do it. Even with
that's on the, like, just to be clear, that's on the lower time frames, and we're trading like we're trading now. But with the way I'm trading, with the swing trading approach, or the, guess you could say swing scalping, if you will. But when I'm trading the very lower time frames, like today on gold, then I have clear rules for the indicators giving me signals. But the way I'm trading normally is I'm not using actually any indicators. I'm trading strictly discretionary, but there is still very, very clear signals, and that is usually bullish engulfing at support, bearish engulfing at resistance, and that's basically it. So when I'm in that mindset, I tend to think, I zoom out and I look at the markets and I ask myself, what's the most likely direction? But it's interesting because you're doing it in a way where it's just so different from me. We're looking at, we usually come to the same conclusion, but we're doing it in such different ways, which is just very interesting to see.
Yeah, I agree. We see that between us, but also with the guests we have, which we have completely different ways to look at the market, but we still see the same thing from a different angle, and we come to the same ideas based on different tools. So yeah, I see your point. But what I wanted to say was that when you use price action and getting that narrative, I think there's value to that, and you can frame your ideas and your trades based on that narrative. But I wouldn't rely too much on it, right? Even if it works, even if the majority of the time it goes your way, I would prefer still to have strict rules, a mechanical system that tells you when to enter and when not to enter. Because once you let go of a mechanical system and you go discretionary, it's hard. It's hard on your mindset to stop yourself from over trading, for example. Because
Yeah.
if you got to have those rules in, and you got to have, I prefer to have so much as possible a mechanical system, and that's what I do. I trade on the mechanical system. My analysis is based on the order blocks being formed, and I can sense that selling coming in, like just now, but I didn't trade, I didn't short it. So it's my reading of the market, but it's not my strategy, in the sense that it's not my trade plan. It's not because I think I see those structures coming up and that's all I need to see, and I go short. At least to me, it's much more comfortable and comforting to have a system external to me, which I, put together. But at that moment, it's not me deciding to enter. It's the system that tells me to enter. I just follow the system. I think that's a huge, huge pillar of success, right? Having structured way to approach the market and having rules that are doesn't depend on the weather, on your stress level, doesn't depend on all those external factors which have nothing to do with the market. It only depends on the trade plan, which is based on the data. And that is, I think that is, there is, it's not as sexy because, discretionary is, I find it looks more attractive, right? Being that wizard, knowing when to enter, when to not enter, and it's all like magic. But I think being as much as possible mechanical, is best for probably almost everyone.
Yeah, no, I'm absolutely with you with that. I do, however, think that the longer you trade, the more comfortable you can become with a discretionary system, and the more, the longer you trade and the more experienced you have, then I like I'm every day, I'm moving towards the discretionary side of trading, because I, like we talked yesterday with Saul, and I'm like, oh, if I'm adding the fib here, that's the 0.618, and he's like, well, yeah, I know that that's the 50% fib. I know that this level is the 50% fib, but I don't need to add the fib to know that. And like, if for example, if I see a bullish engulfing candle and there's most of the time a stochastic RSI bear cross, like sometimes I can think like, well, okay, I can look at price action and say, yeah, this is most likely where stochastics is high or low, because I can read price action like that. If you have a very big move to the upside, yeah, stochastics is going to be high. If you have a big move to the downside, stochastics is going to be low. And but then if the next move to the upside is slightly less volatility, well, then maybe the stochastic RSI is not going to be very high. So you can get all of that information from just reading price action as well. And I think, when you've been trading for, let's say, 10 years or something like that, and I've been trading for 7 years, and I do feel like I'm very close to the level where I don't need anything on the chart. Like, I only need price action, and that's all I need. But like you said, like, I also think that most people are better off having a systematic trading system, like strictly rule-based system. And if you can stick with a strictly rule-based system for all of your trading career, then that's great. If you find something that's profitable doing that, that's great. What I'm a bit frustrated with is, like, it's just so much easier for me to be discretionary, because when I put together a system, this is just so much work. There's so much work behind that. But I know that, like, I have a system in my head, like that intuitive side of me is my system, but it's also taken me 7 years to get to that level.
Yeah, definitely. Me too, right? I'm always trying to put in, although I need to be careful with it because I've measured it times after times, that if I deviate, there is a sweet spot as to how much deviation I can have from my mechanical system. The mechanical system is profitable, but it's very selective and doesn't give me not enough. It doesn't give me all the time signals. And I can reading price action and using the actual system without the trigger. I can, think of more signals if I wanted to. And that, to me, those are not the actual signals, of course. So I know if I deviate a little bit, I can get more signals and they're still profitable. So that's what my way of being discretionary. But what I notice is the more I deviate from my mechanical system, the less profitable it is. So there is a sweet spot there that I always, I need to be mindful of, because okay, I can skip and have one entry or one trade among the other ones that are actual signals to be something that doesn't fit my trade plan completely, and I would consider that discretionary, a discretionary entry. But I should not be doing that in the majority of the cases, because it's when, and when using, deviating too much from my system. that's where I need to watch out. But me too. I like doing it because it's kind of the art part of trading, right? You're reading it
Yeah.
and you're doing it, like a painter painting. It's not an architect painting. It's someone doing it from the eye, and of course they have tools and ways to do that and techniques, but they're still doing by free hand. So and I like doing it. So, but I need to watch out. I know that for myself, that it's it's uh it's like, let's say, salt in and when you're cooking, you need just a little bit. If you put too much of it, you ruin it. That's
Yeah.
basically what I think about, at least for me right now. Maybe in later time I might get improvement in that sense, but to me, I need to keep it to the mechanical system, and be careful with how much discretion, how much I deviate from it. um I see. Let's check the chat. I'm not sure what do you know what TR is, Jonathan?
No, he has mentioned it a couple of times, and I was wanted to ask that. So let's see. Let's see. I'm sure that he's still here and he can answer that for himself. What TR is? Oh, gold really wanted to go lower.
Yes, trading range.
Wow,
Okay, so
trading range. Okay.
the question was actually, let me get the question back in. Victor, does it made you think it may be still trading range? I'm not sure I get the question. Uh,
No, maybe because price action was quite condensed and it was just in this trading range. I don't
y-
know, but like
yeah,
it's
perhaps. Yeah, or maybe it was something that is specific to what we said in the 20 minutes ago, and now I cannot make the connection. But basically, um, what I think was that this was the area that needed to be defended by the bulls, by the buyers, and it clearly was not defended, right? And it didn't trigger me, so there was nothing to be done. But what I now think, right, after assimilating this price action after the news, this is what I now have, right? Or this is what a price action is actually telling us right now. What do we have? I always start my analysis with that. What do we see? And what I see is this: we have a quasi on the H4. This being the quasi, it's a trend. Actually, it goes all the way here down, and it's making higher highs. So you have a confirmed trend, right? An established trend, and then it breaks that structural low, right, for the neckline. And this is what I expect. The only thing is, on the H4, I don't have an entry order block for that, so that makes it a little difficult for my trading. Meaning, I would not be trading. This wouldn't be a pure signal for me because I don't have the H4 telling me where to enter. And if I were to, for the sake of this stream trade, I would still look for the lower time frames on the H2 or the H1, where in this leg, right? I mean, from this point or whichever it may reach, where in this leg from the head to where it broke that neckline, where did the sellers come in, right? And the only place I see that is in here, where with the news, this is the outside bar. Maybe I should start talking about the outside bar before we have only 5 minutes again. But
yes, I think that's a great idea. Maybe we could. Yeah, let's do that. Let's do maybe
so
rest of
maybe
the stream.
let me yeah, sure. So what I and that this is the area to be for the quasi that I would be looking now for this short. So and this is, remember what we talked about. You mentioned you want to see the initial news to materialize first, then come back to the initial place it started, and then you want to be shorting it or going long, then you want to enter, right? It's the same idea that I have with the quasi, right? With the order block, it's all the same. Actually, a quasi a lot of the times is an order block on the higher time frame. If you look at the quasi, a lot of the times you can see that, and it's the other way around too. When you see an order block being retested, a lot of the times on a lower time frame, you will find a quasi. So basically, they're two of the same things, just in a different zoom level, right? Level of zooming. And that goes to speak about the fractal nature of the market. So what I expect, or not expect, I don't expect price to come up, but if it comes up, this is the area I think I would want to be shorting. It is not a pure signal for me, as I said, but if I were to take a trade on this stream, and it's probably not going to happen, we only have 25 minutes to go, and this will probably not come this fast back. But this is the area, whenever that happens, even if it goes a little bit lower and it comes back, this is the area I want to be shorting. Because that's the area that the sellers came in and took control. So that's the area when price gets back, will probably have the same reaction, and I would be shorting that. I will look for an entry in the lower time frames, put my stop above that area where it gets invalidated, and target whichever low was put in before the move, the lowest point from the whole structure. That's just a hypothetical setup which hasn't happened yet, or it is a setup, but the condition hasn't been met yet. It needs to get to that area for me to enter. But let's get to the long awaited topic of the outside bar.
Yes, finally.
Let's see. I thought I had it. I think it was in was it in this price feed? Maybe it was here. Maybe yeah, let's talk about it. Maybe I can use let me see. I thought there was something on the, I think it was on the, no, it wasn't. This isn't either one. No, let's just use gold and the actual candle we have in front of us, which is the outside bar on the news. All right, so I don't remember which stream it was exactly, but in a couple of streams previously, I talked about the engulfing and what are order blocks to me, right? Order blocks to me, which is slightly different than most other people, since I simplified it. I took out, for those who weren't present, an order block to me is just an engulfing, right? The more popular way of defining an order block has to do also with how price moved away from that place, right? How impulsive it was, and the last bar in the opposite direction. And for the example, we'll use this one, right, which is also an outside bar, but that's beside the point, right? We have to me, this is already, just by the fact that it closed as in this time frame, just by the fact that it closed as an engulfing, I would draw here, this will be the order block, right? Just the fact when the bar of the second candle overcomes and is bigger than the first one in the opposite direction. But the other definition, or the other candlestick, two candlestick pattern that I also consider an order block, is a outside bar. And what is an outside bar? Let's use this same candle to illustrate my point. It's actually very, very simple, but very, very powerful. And that's why I call it engulfing on steroids. Engulfing already are very useful in the market. As you know, we mention them all the time. It's not for any other reason than the fact that they are powerful indications in the market of who to control, because that's what it's all about. Now, what we have here is, besides this being an engulfing, where the second bar, right, the second bar is the body of the second bar, right? This being the body, this bigger, this wider, not the wicks. The body being bigger, right, of the second bar. Besides that, what you have with an outside bar is that the second bar takes out the range of the first bar. Very simple. What do I mean by that? Well, the range I I put on these horizontal markings line to indicate the high and the low of bar number 1, right? And for it to be a outside bar, bar number 2 takes out one side of that range and then closes on the beyond and takes out also the other side and closes outside of that range, right? That's why it's called outside bar, right? Outside of the range of the previous bar. And the reason this is powerful is I talked about that also on with in the previous one when I talked about the engulfing. It's about the psychology of the market participant. And if you think about it, what is going through the head of everyone through with during this hour? Let me get this line out of the way since it's not very important for our topic right now. What goes through the mind of everyone who is participating in this candle, right? Imagine we don't have these two red candles, bearish candles yet. We're only here in time. What we have is the market is convinced or is convincing everyone by showing this bar, that the buyers are in control. And so everyone who bought here and hasn't sold it, didn't scalp out or didn't take profit anywhere else, they're still in the trade. Okay. And because that's, it's clear the dominant side of the market participant is buying. That's why the bar went up and closed as an bullish bar. Now the second that period closes, that bar, and the second period starts, right? The next hour in this case, since this is a 1 hour candle. What happens is that when the candle closes below the entry or the open of this candle, it now shows without a doubt to everyone who is still long here, right, that they are on the wrong side of the market, right? And that the market, they start feeling the pain if they didn't have it already. If the entry isn't higher at this point, it's clear to them they're wrong. This is going to be painful. They're not comfortable, right? And that's that psychology or that psychological aspect of what I just explained is what I say when the engulfing happens. But what we have here is not only the sellers coming in and taking control and showing everyone who was long here that they are on the wrong side of the market. What you also have is all the breakout traders who, when this next candle, the candle number 2, when it breaks the high of the previous candle, what you have is a new high, right? And what is a new high mean for just about anyone? It means that the market wants to continue, right? That's the breakout. So everyone who is trading a breakout strategy, when this breaks, right, they want to go long, they want to get in, right? So not only you have people who entered here, but now they enter even higher, right? So if the engulfing is is a sign of traders trapped, an outside bar is an even stronger indication of people who are even more trapped, right? Because they're trapped with a fake out. And then the market, the bar goes not by a little, right? Coming back a fake out by a little. No, it goes and closes completely on the other side of the range of the previous candle, right? So it's like almost a knockout in a boxing ring for those traders who got in as the market, was telling them, at least that's what I thought, that this is a buy opportunity, and they're completely smashed by price action. So you can imagine that once this happened, everyone is in pain. Everyone who bought not only those who bought as the market was going up in this candle, but everyone who bought this breakout area are completely wrong, and they desperate to get out of the market. When that happens, the market hangs, right? You see the couple of bars. It's that psychology. Uh, it's the engulfing, but even stronger, because you're not only trapping the buyers of the previous candle, but also all the breakout traders of the current candle. Now, that's an outside bar. And now coming back to the order block, both of them are to me the basis of order block. So if you have an engulfing, to me, that's an order block and an outside bar too. Now you might think, why do I make that distinction? They both are engulfings, right? The outside bar in this case is also an engulfing. Why do I make a distinction in having two different definitions for the same thing? Well, the thing is that the outside bar doesn't have to be an engulfing. It doesn't have to be a candle in an opposite direction. And that's why I like this candle, because look at this. Is this an engulfing? Right? You have a bearish bar, and you have the second bar is also a bearish bar, right? So if you were only looking for a engulfing, you would miss this, because this is not an engulfing. It's not the opposite direction, right? Although the body is bigger than the first one, but the definition of an engulfing is that it needs to be in the opposite direction. This isn't in the opposite direction, so it's not an engulfing. However, does it fit the definition of an outside bar? Let's look at that. Let's put on our lines the high of bar number 1 and the low of bar number 2. Is it an outside bar? Yes, sir. Right? It takes out the high of the previous bar and closes below the low of the previous bar. So it is an outside bar, and that's why I have both definition, the engulfing as well as the outside bar. And how do I draw the order block, which wasn't part of what I was going to say, but now I'm all on the topic, since I mentioned that the order block, the way I mark it is by the open of the first bar and the highest point of those two. It can be the first one, it can be the second one. In this case, it's the second time. That's the order block to me. Okay, it's something personal. If you don't need to do it precisely that way, but that's how I do it. Now, you can do that. Well, you can. Yes, you can do that with the open of the first bar, which would be this here, right? And then that's not the right tool. The open of the first bar, and then the highest of them two, and have the order block like this. If you do that, that's fine. I think it's as valid as anything else. However, what I like to do when I have an outside bar, and by like, I don't mean just a preference of my personality. I actually tested it. What is best for me, for my strategy, and gives me better signals is when I take, in this case, when the outside bar is comprises of two bars in the same direction, I take the close, not the open, the close of bar number 1, this is a bearish bar, so it's the closest lower. And then I take the high of bar number 1 and bar number 2. And this now becomes the order block, right? So this is the area that needs to be, not needs to be, but if price is going to come back, this is the area that I would like to be selling from, because this is a bearish outside bar, and that is why I have the area. And this is on the H1, just to make my point, because on the H2 there is the outside bar isn't engulfing as well. But I wanted to show that example where it isn't an engulfing, but it is an outside bar, which is on the 1 hour, right? It is an outside bar, but not an engulfing, right? But in this case, because the H2 is a higher time frame, I'm more interested in this order block and not the one on the H1, right? H2 is stronger, being stronger than the H1. So that is basically, as you see, it's not rocket science. I'm only using the open, the high, the low, and the close of the bar. It's very, very simple, even to backtest. You can, if you think about this, you can start thinking ideas. Okay, how can I use this in my strategy? How can I think up a strategies or entry criteria or setups based on this concept. And I invite you to do that because I think you will open a world of great stuff. All right, so let's that was outside bar basically, and so this is the area that coming back to the setup now. This is the area that I would be interested in to sell from, right? So if price comes back, I will want to be selling that because that's the initial area where price sellers came into the market, and I can see that if we go to the H4. To me, there is a quasi here with a neckline here, and this wick activated the quasi, if you will, right? It activated it. However, on the H4, we don't have an entry order block. So it's not a pure signal for me, and I will not be trading it according to my trade plan. But if I were to choose an area, this would be the area that I want to be shorting from. All right, so that is. Let me check if in the chat if there are any questions about what I just laid out. Haresh says, "I understand Victor 100%. I like that. Great. I don't see anything, any questions, so I think it's clear. All right,
Yeah,
so it's very simple, and I think that's the what makes it also powerful. It's very simple. If you have those rules clear and you practice with them and you start reading price action based on the formation and the invalidation of those structures, man, you just open up a way to read the market like never before. And it's so simple.
Yeah, no, definitely. It's I mean, it's a fairly simple way of looking at it, definitely, and because you have so few things you're looking at, you know. And
Yeah.
Here's a good question: what about outside bars? Yeah, we've talked about that for the last 30 minutes. So if go back, watch the replay. Around 30 minutes ago, we started talking about the outside bars.
Maybe the viewer wanted to ask, what about inside bars? Because there's also a thing as inside bars. I don't use them, but you probably, they are. I don't want to, it's not a competition which one is stronger, but I chose the outside bar any day of the week if I have to choose one thing to use as to trade from, because it's very, very powerful.
I think this is a good question. Not sure if you touched on that, but confirmation.
Sure. Well, it depends. It depends because what I've noticed is that and many people have. This is not something that I came up with. I mean, it's we know this from many people have talked about this. You have two things to take into account. One is whether it's the mitigated or an unmitigated order block, right? And what they mean by that is that has price already retested or revisited? If it hasn't, then it's an unmitigated, right? And if it's a mitigated, it has, right? So very simple. And an unmitigated order block is usually stronger than a mitigated order block. Doesn't mean that it doesn't work. You can still trade from a mitigated order block, but just know that the win rate will be lower, right? It's an inferior, it's less strong as an order block. That's one thing. And if you ask yourself, okay, so do I enter on the first attempt or the second one? Just to begin with, you need to define what is your first attempt. Is that the first candle? Is that the first swing? Well, what is your first attempt? We need to make that clear before we talk about that. So that's one thing. The second is the more attempts you have, the weaker the order block becomes. That does not mean to say that you cannot trade the second, the third, the fifth, whatever, the 10th time, but just know that the likelihood of it holding gets smaller as the number of attempts go up. So which one I use depends on the situation. If it is that's one thing. So it's the number of attempts, number of it's mitigated or not, which is also if it's one or more than one, right? Attempts. The other thing is that I have seen is that the freshness of the order block. And I talk about this on the workshop in the Discord server a lot. And it's one of my rules that I use when I enter, and to decide whether an order block is a good one or not it depends on the freshness, right? So I've noticed that the fresher it is, and by freshness I mean the number of bars that are created after that are printed after the creation of the order block, right? This is the order block, and these two candles, they formed or created this order block, right? So this is the first candle after the creation of the order block, right? So the number of candles printed after the creation is has a predictive value whether that order block will hold or not. In plain English, it means it depends on the freshness, how many bars were created, how well the market will respond to that order block. And it's very simple and very logical if you think about it. Just think about this. And I tested it, so I talk about data, what I'm talking about, but it's also there's logic behind it. Would you think that the market will react to this order block more than, let's say, a order block that is all the way back, let's say, from this area? Which one do you think it will react better, right? It may react from both of them, right? But which one would it probably react from? This one, which is way back in the past, or the most recent one, right? If you think about it, this is obvious. This is in your face. Yes, exactly. The fresh one. It's in your face. It's obvious for everyone. The one further down in the past, not everyone is watching because they may not have gone to the past and have that as something relevant for them. So, and what is the difference between this one and that one? It's the number of bars created since the order, or printed since the order block was created, right? It's time, right? So it's not fresh anymore. It's stale, if you want to call that. So it doesn't mean it's not useful anymore. It is. I still trade them, but they are different. So you need to treat them differently, right? So they're not all order blocks are created equal. And your chances of being profitable with order blocks is by defining and discerning and distinguishing which one to be traded when, right? Since it's a very simple structure, it doesn't mean that the price will react to all order blocks all the time. It doesn't make sense, because if that's going to happen, then price will never break out, right? Because a breakout is usually breaking of a structure or a range, and typically you will find order blocks at each side of that range, right? So it's there are more to it. There are more layers, more difficulty levels to how to trade an order block, but the basic idea is very, very simple. So that's it. Freshness of an order block. So those two things are important to decide which one to be taking. So to come back to the question, which was, do I take the first entry or not? It depends on what kind of order block it is. If it is a setup, because each one of them is different. If it is a fresh order block, right, then that's one type of setup for me, fresh order block, right? And but there are other order blocks that I trade which are not fresh, and those are part of a quasi, right? So it's either an entry order block on the quasi, or it's a fresh order block based on something created recently. So and this is what I mean by setup. Is this is the structure that I look for on the hourlies or sometimes the dailies, right? So the structure where I base and form my idea on the setup, not the execution time frame, which is on the minutes, which I use the same concept but a little bit different. All right, so I think that explains for that user. Are there any other
And
questions? Let's see.
I think that's a great explanation, and right on the 2 hour mark as well. And I think that's a great way to actually end this live stream here today. We're done. We didn't have any break today because I felt like we had a pretty good flow with gold there, and even though it's been rather choppy once again, maybe it's just Wednesday curse. I don't know, but it's been. It's been rather choppy, but we did get in one good trade and some interesting analysis on gold, and really challenging ourselves here to try to find trades where we maybe normally wouldn't have found the trades. So yeah, very interesting. Thank you everyone for joining here and being a part of this live stream here today, and being active in the comments and engaging. And obviously you guys seems to really like these live streams where we're trading gold. So that's something we're going to be continuing doing on Wednesdays. This right here, he says he's happy with a short answer, so I will be. It depends. I mean, it depends. With my swing trading system, discretionary, I take about on average, I think 4 or 5 trades a week, and I can't really give you a good number on my mechanical system because I haven't really traded that in a while, and it depends on it depends on so many factors. I don't really have a good answer to that.
In my case, it depends if I get triggers, because if I may have a day where I don't have any signal, but if I do have triggers, they come in groups. So I don't have just one. I may have 4 or 5, and since I'm trading EU and GU, you can imagine they both may trigger, not at the same time, but at the same day. So I may have 15, 20 signals, and only a minority of those actually work. But it can be a couple of, like a dozen or even a little more than that. And other days I may only have 2 or 1 or none. And there was another user who asked before we wrap up, how many pairs should we trade? That user was mentioning something about over trading. I think this is important to mention because it's something that I struggled with for some time. I thought, if I have a profitable system, why do I limit myself to just one? Let's trade all 28 of them, right? And it makes sense to think that way. But what I noticed, it depends on the system, because if the system needs a lot of your attention, you're not able to execute it according to the trade plan, especially if you're in the lower time frames, for many pairs. It's not going to happen unless you have something like a system that only places a limit order once a day. Then okay, and you can trade 28 or even more pairs. But if you are like I am, where I go from different time frames looking for different things, and waiting for that price to come back and then give me that trigger, and they make multiple triggers, you're not going to be able to focus on multiple pairs doing that. So what I did was, I was struggling with doing trading a lot of pairs, and I only focused on EU. And man, that made a huge difference. I could, my execution improved right away. And now I'm expanding slowly. I expanded to GU, and that's why I only trade EU and GU, and I can handle 2. And I'm right there, and I'm thinking in the future I might maybe put another third one, but it's another one. But right now I'm good with only 2. So I think that's a great question to ask for everyone.
All right, guys. That makes a lot of sense, Victor, and thank you for that explanation. And that's it, guys. I will see you guys next week. We're going to be back on Monday, and I hope you all are going to have a great rest of the trading week here. So without further ado, which you probably don't say when you close the live stream, but I just did. So that's it. Take care, guys, and see you all next week.
Yes, on behalf of every viewer, thank you, Jonathan. Thank you.
Well, thank you, Victor. Thank you, Victor.
All right,
right,
see you
take
guys
care.
next stream. Bye-bye.
Yep. Bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other